Hey everyone, welcome back to the end of the second week of November. Today's the 10th of November 2023. Just want to give you a quick review of what the market has been doing and how it kind of match up with what our outlook was at the beginning of the week. So let's first take a look at the AUDUSD, where we're expecting that market has already priced in for the potential interest rate hike by the RBA. The RBA did hike interest rate by 25 basis points, and we mentioned that there might be a potential, if that happens, that market would be disappointed and we could actually see a little bit of a sell-off in the AUDUSD. And that's basically what we got. And the reasoning behind that is that when the market starts on Monday, it was at that resistance zone at about 65 to 65.25. So we do expect a little bit of resistance. There was a little bit of resistance building up from the Ishimoku cloud as well. And we were anticipating a potential return back to the green zone. It was at about 64 cents to 63.50. And price as of Friday, it did touch base on 63.50. Now let's take a look at the momentum here on the daily time frame. There's a little bit more room to go for the AUDUSD. Should it close below 63.50, we are going to be expecting further run to the downside with the AUDUSD starting from next week. So it'll be interesting to see how the week closes. Is it going to close above the green zone that we're looking at in the market, or is it going to close below that support area that we are anticipating and basically have seen the market pull back all the way down? It is a significant pullback because if we take a look at the resistance at around 65.25 all the way down, this week's price movement, that is a significant move in the market. So let me just bring that out for you and let's just label it. So we actually have a drop of about 1.7 cents, and that's a significant drop for the AUDUSD. All right, so let's move on to the EURUSD next. This one here is a little bit confusing. We have a little bit of comments, a little bit more of a hawkish comments coming out from the ECB, and it kind of pushed price up a little bit for about 2 days. And then, overnight we have the FOMC James Powell basically going back to being more on the hawkish stance, talking about a potential interest rate hike going forward in the future. And we can see the move here. Overnight, it was a significant rejection. We can actually finally see price breaks below 1.07, but it doesn't actually change the status quo. If we take a look at the channel here, and this is the focus on our outlook, is that price is likely going to be trading within this channel, and that's basically what we got. Price did not go out of the channel. In fact, on Monday, it did attempt to go out a little bit. It found a little bit of a resistance at 61%. It came back inside the channel, and we're currently moving, tracking lower within the channel here. So again, there's a lot more room to go for this one here. And as we approach 1.0650, and if we take a look at the lower end of the channel, if we measure that lower end of the channel, we should be anticipating a little bit of a support to come in closer to about 1.06, and that would be the anticipation for the EURUSD here. It'll be very interesting to see how it actually closes the week. Is it going to close below that 1.0650? If it does, it's going to cross that threshold, and we're likely going to be seeing further move to the downside at about 1.06. And if we do break that 1.06, we are going to close out of the channel. That would mean we're likely going to be seeing further continuation to the downside for the EURUSD. Now, let's move on to the Pound USD. This one, very similar situation as well. We pulled back, found a little bit of resistance at 1.23, 1.2350. It's more or less, it seems like more of a liquidity grab rather than anything else at about 1.23, 1.2350 here for the Pound USD. The pair has now moved outside of the Ishimoku cloud. We are now currently looking at that support again at 1.22, and this is going to be the key level to watch out for if the market is actually going to close below 1.22 at the end of this week. Now, next is the Japanese yen. This one here has progressed further and higher to the upside. And again, as we mentioned in the outlook, there's no change in terms of where the trend is for the Japanese yen. Interest rate differentials between the FOMC and the Bank of Japan remains the same. One has an easier monetary policy. They're looking to tighten, but we don't actually have official confirmation until 2024. But for now, this is what it is. Traders has pushed back. They're looking at range around 149.50 to about 150, and this is mentioned in the outlook. Those are going to be the potential area where a lot more traders are going to be looking to buy in on the dollar Japanese yen. This is what we got, and currently price is trading closer to that 150, 150. I think there's room for this one here to progress even higher. We are currently looking at around 152 and potentially even higher. We do actually have a new Fibonacci extension that we can use. Obviously, the 100% is going to be located at about 151.70, but take a look at it, 1.27.2%, 127.2% is located at 152.40, 152.50, and the 161.8% is going to be at the upper limit of that 153 cents. So I think there's a little bit more room to go for the dollar Japanese yen. Now, lastly, we are going to talk about gold. For gold, we did mention on the outlook, this one here is looking a little bit exhausted. You can see the movement here. It was we basically have a flagpole and we have an ascending channel. The combination of the two is typically more of a reversal pattern for gold. And basically got what we kind of anticipate from Monday. We saw price pull back to that support area, which is around 1940, 1950. Now, if you're wondering what else is in the support area, apart from this level being a critical level for gold throughout the year, you can see how it started for 2023, and price for gold has basically just revolved around this area around 1930, 1950. But there's something else in here, because the latest run to the upside for gold, we actually do see a little bit of a fair value gap as well for gold, right? And this is basically where price bounces off overnight. So this is going to be a strong support. But if we do break below this fair value gap, it's also going to close below the support area that we see, or the critical level that we have on gold here between 1930 to 1950. But for now, it's holding on strongly for gold at this point in time. But I doubt it will actually last long, because the overall tone for this one here is that there's a lot more resistance to the upside rather than support to the downside. At this point in time, we can also take a look at the daily time frame here. There's actually a small fair value gap, but if we remove the intraday fair value gap, which is what's holding price at the moment, beyond this, there's a higher one at about 1980 to about 1985. There's going to be another block at about 1985. So gold traders need to be a little bit more cautious. It's no longer a run to safe haven assets at this point in time. As the conflict in Gaza, kind of drags on, a lot of people are just losing interest at this point in time. So with that, we are looking at a little bit of a weakness on gold at point of recording. So focus, again, we're still going to respect 1930 to 1950 as a potentially strong support for gold. And as long as it's trading around this area, if it continues to bounce off this area, intraday traders might be looking at an opportunity to pick off some of, a little bit of retracement that, when we see price bounces off 1930, 1940, 1950, these are good levels to look for, just a quick intraday short. But in terms of positioning for the long term, buying gold at this point in time, it's a little bit questionable, because we are kind of at that threshold where it could actually transition to a much deeper correction. Because if we break below 1930, the repercussion for that is that we might actually see a little bit of a deeper pullback all the way down to about 1885, which is a significant drop for gold, right? Because we are looking at the movement below 1930 to about 1885, that's actually worth about $43, $44. So be a little bit more cautious if you're thinking of picking this up and holding it for long term. I know a lot of traders out there are kind of looking at this and say, hey, you know what? This is actually a good discount, right? 1950, we might actually trade it back to 2000. But I just want to explain a little bit about the dynamics here for gold here. Things have shifted, and the current crisis in Gaza, it's just too overextended. People are just exhausted, and traders are just losing interest at gold as a safe haven. And the FOMC being bullish again doesn't really help, and the positive fundamentals for gold. So that's kind of borderline. And in fact, I'm actually looking more for further push lower for gold at this point in time. All right, so with that, let's wrap up this week. Have a fantastic weekend, and I'll see you again next week.